Bitcoin has pumped to 78K over the last week, bringing back in some hope in the crypto market. However, we're in a tug of war situation currently, as first we're hearing the Strait of Hormuz is open and then closed. This could lead to some form of volatility within the market, but where do we expect BTC to go over the next couple of weeks? Stay tuned until the end of the video and I will be telling you all the key levels of where I will be buying and selling. So firstly, what we can see is on the weekly time frame, we've finally come out of this accumulation zone down here. So we've been accumulating over the last 8 to 10 weeks within this range between 75K to, let's just call the lows down here of 60K. What I want to tell you guys is we're in this range. What we're expecting is the accumulation. After accumulation, what do we expect? We expect manipulation. And that's exactly what we're having right now. We've got the manipulation, and usually after the manipulation, we get distribution. Now, this is the core basic fundamentals that you should understand: accumulation, manipulation, distribution, right? Now, this is the phase that we're in right now, and that's exactly what you can see. I am expecting BTC to go higher. However, I want to caveat something because we want to make sure we understand how the weekly time frame closes. Now, if we close above this level down here at 76,000, this is a good sign for us for the possibility that BTC will continue going higher. And if we do continue going higher, my key levels that I'm looking at is between the regions of 80K to 84K. Those are the levels that I'm looking at. We could possibly go higher, but those are the key levels that I'm looking at. Let's put on a fib from these levels as well. If we do go higher, I'm expecting price to come deeper into the premium side of the dealing range above this level down here. So anywhere between the 61 to 78.6 retracement. So within the regions of 84K to 90K. Now, realistically, I don't think we're going to get to this level down here, but there's a possibility we can tap in to the 61.8 around 84K, and then we can reject from there. Now, that is only if we do get a close above on the weekly time frame above this level down here of 76,000. Now, having said that, if we close below this level down here, that basically means we've grabbed the liquidity that we wanted to. And there's a possibility that we can roll over from here to the downside. Our first targets, like I say to you, to the downside is 60K. The second target is 50K. Now, to be very, very clear with you guys, nothing has changed for me. What we're seeing right now is a relief rally. Therefore, I'm still expecting BTC and all other cryptos to drop to the downside and come into these levels down here of 60K and 50K. Even if we continue moving to the upside, I'm still expecting the deeper pullback to the downside. This is a relief rally, and that's why I want to be very, very clear with you guys. However, this is a good sign for us because we are trying to break out of this. We're trying to break out of these regions, which is a good sign. Now, if we break this will be known as your break of market structure. And usually when we see a break of market structure on the higher timeframes especially, it's the first signs of a change in the state of delivery, and we're likely going to go from bearish to bullish. But we need validation for that. We need confirmation validation. Have we grabbed any liquidity to the downside? Now, one other thing that I want to show you guys is in the past when we've had the relief rally, let's see how, if we go on the monthly time frame, let's see how aggressive the relief rallies had been. So we can see down here in 2022 when we had the relief rally, price went up to 45%. Now currently where we're at, price has gone up from the lows to the highs around 30%. 45% would be here, 88,000, so just below 90K. So therefore, there is a possibility we can continue moving higher before we get the bigger move to the downside. So don't get too excited yet. And don't expect BTC to continue pumping all the way back to the all-time highs from here. This could be a trap, and that's what you need to be very, very careful of. Now, daily time frame, I want to deep dive a bit more into the analysis that I've done on daily time frame. First things first, sweep of liquidity to the downside. Great. Also a sweep down here, aggressive move to the downside, and we get a move up. Very clean price action as we're creating lows, sweeping liquidity, moving up, creating lows, sweeping liquidity, moving up. So very, very clean price action. We had a break of market structure. Price rejects this fair value gap, comes back up. Break of market structure, comes down, sweeps liquidity, comes back up, taps into this area, rejects it. This was a fake move to the downside, and I took an entry from the highs down here around 76,000. As soon as we moved to the downside, I moved my stop loss to break even. I was in a good amount of profit. I banked about 20% off it, moved my stop loss to break even, then get stopped out at break even, which I'm completely happy with. And this was also a swing entry for me because I was expecting a bigger move to the downside if we had rejected this level down here. But as you know, that was a fake out, and we continue moving to the upside. So what we've been seeing is clear bullish order flow. Now, to caveat down here, what we can see if we zoom in, if we continue doing this and moving to the upside, essentially what we want to see is low resistance liquidity. And we can see that down here. I've taught you guys this before, but very, very quickly, what we want to see usually for high resistance liquidity is we get the wick to the downside and price takes out the previous low or some form of liquidity. What we can see is we had that down here and we also had it down here. So we can see price has been taking it out down here as well, down here as well. So these are all high resistance liquidity. But down here, what we have is low resistance liquidity. We haven't taken out this low down here. So there is a possibility that price will come to the downside. Taking out this liquidity, we may struggle when we come to these areas and reject off it. And the reason why I'm telling you guys this is when we get into the shorts, these can be your scalp positions, whether it's to the upside or downside. We want to look at these levels because as we come to the downside, we can take a scalp to the upside and then move back down. And when we move back down, we can look for the short positions to the downside as well. Our targets will be the low resistance liquidity levels. Now let's go lower on the 4-hour. Normally I don't show you guys the scalp position entries that I'm in, but I did get some comments saying that you want to deep dive into understanding more about my scalp positions. Now we had a very, very, very clean entry down here. We had the move to the upside, price takes out this liquidity. I'm expecting a bigger move to the downside. Get into my entry down here as a swing entry, move my stop loss to break even. As we move down, bank 20%, and then get stopped out at break even. Now, as we come down here, now this is a very clean entry. As we come down here, we move to the downside, come back up. We get a move again to the downside, sweep of liquidity. When we get that sweep of liquidity, we can go on the lower time frame and see what we're looking at, because what we would want to see is something like this for formation for an entry. So we want to see sweep of liquidity, price moves up, price comes down, taps into a key level. That's your entry there. So what we have down here is price comes down, price moves up, sweep of liquidity, moves to the upside. Now, this move to the upside is a very, very good move to upside because we have a break of market structure, and that's essentially what we want to see. And then we come down. Now, this is your scalp position entry, which I am in right now, and I've banked a good amount of profit. So as we move up, price comes down, fair value gap down here. We do tap into the 50% dealing range. If I put this on down here, there we go. We tap into the 50% of the dealing range, which is a clear sign for us to say, okay, look, price comes into the discount side of the dealing range. Let's look for an entry. A slightly aggressive entry, but I did want to take this entry to get some exposure to the upside. So there's your entry. Stop loss will go below these lows down here, and we will be targeting the 80K region for this specific entry that I've taken. Again, scalp entry, banked quite a lot of profit as we moved up, but let's see how that plays out. Now, what else am I expecting? So to summarize on the higher time frame, coming back onto the weekly time frame, to summarize, what I would like to see, number one, is if we close above 76,000 on BTC, there's a possibility we'll continue moving to the upside. Now, if we continue moving to the upside, where am I banking? Where am I looking to take my short positions? My first entry for swing position is at the 50% dealing range, and also this fair value gap on the monthly time frame. So that's at 80,000. Now, if we continue moving to the upside, I'll be looking within the regions of 83,000. And if we do continue moving to the upside a bit more, I would expect BTC. Let's have a look at the fib level. I would expect BTC to come into the regions of 84,000, 84 to 83,000. That's where I'll be looking for my short positions. Now, if you want to place a safer entry and not just take that risk of just entering at 80,000 or 84,000, what you can do is come to the 4 hour. As you come to the 4 hour, the kind of setup you want to see, if I show you an example down here to the downside. Right. So the kind of setup that you want to see is something similar to this. Okay. So we get a sweep of liquidity to the upside. We get a strong, aggressive move to the downside and a clear break of market structure. Now, when we get the clear break of market structure, that indicates to us that price is ready to reverse and come to the downside. Of course, this is on the 4 hour, but this could be a safer entry for you guys. Now, as we get the move to the downside, what do we expect next? We expect price to come back up into a Q region. Price comes into a fair value gap down here. We tap into the premium side of the DNM range, and we also tap into this key fib level down here. Therefore, that's how you take your entry to the downside, and you will target these swing areas, lows down here. So therefore, what you would want to see as we move up now, as we come into within the 80K region or the 84K region, let's just say price does come into the 84K region, this is what we want to look at. This is what we want to see. Price comes up, possibly moves down, comes back up, comes up. Now, what we want to see is a move down, aggressive move down. And after that move down, what we would like to see is price, there's the break of market structure. Price comes back up into a key level. Here's your entry. You can put your stop loss above this. I would probably have a larger stop loss because this is a swing entry. So, you can put your stop loss around the regions of 90K if you like to, depending on where we are, right? And then we'll get the bigger move to the downside and we'll bank our profits as we move down. So that's what I'm looking at for my entries to the downside. Now, if price does close below this level at 76,000, where am I expecting BTC to go? Like I say to you guys, overall, to the downside, the swing entries that I'll be taking and where I'm looking to the downside is 60K and 50K. That's where I'm looking. However, I do think that if we do close below, we still possibly can come back up because we do have a lot of liquidity resting within these levels. So what I would like to see is price come down and possibly number one, come into this level down here. So that within the regions of, let's just say 73,000, ideally I want to see this low get swept. I want to see this low get swept at 70,000 and I'll be looking to take an entry there. Now, I will keep you updated on the types of entry I take to the upside because I would have to go on the lower time frame to do the analysis and show you guys. But that's what I would like to see. I wouldn't want to take another entry to the upside if we do move down. So let's see how that plays out. Possibly come into that region of 70K. If we don't, there is some fair value gaps down here. This could be your DNM range low to your DNM range high. Discount side, we can put in a fib as well. So we can possibly, there's a nice clean rejection there. We can possibly come into 72 to 70K. Let's see how that plays out. I'll keep you guys updated. Now, if you like these types of videos, I've been trading Forex and crypto over the last 8 to 10 years. Consider subscribing, smash that like button, comment, and if there's anything else you want me to analyze, let me know and I'll do it in the next video. See you in the next one.